Good morning. This is Dylan Jovine with Behind the Markets. Happy Thursday. Today is Thursday, September 4th, and I have actually recorded this the day before on Wednesday because I am not exactly sure what's going to happen when I get the injections in my hand later today. But anyway, today I wanted to talk about quickly Chrome, the big Alphabet ruling that came out yesterday. Basically, the owner of Google does not have to be broken up, which is great for shareholders of Alphabet. And there are three things to know about this case that I wanted to talk to you guys about because I've gotten a lot of questions in from members, from Behind the Markets customers. We had actually recommended Alphabet last month in Behind the Markets on August 12th. Anyway, so we recommend the stock at 212. It's about 220 now. It looks like it's going to go higher as it gets repriced. And as an aside, I think Alphabet's a pretty good buy right now, too. Basically, you've had a major overhang on the stock for the antitrust case, so it's going to get repriced. It doesn't mean I think it's cheap. I don't think it's really cheap, but I think it'll get repriced up to the 250-ish range, 260-ish range, and it certainly was cheap relative to all the other Mag 7 companies. And it's certainly cheap relative to the market we're in, such a dominant company. But anyway, back to the judge's case. Google gets to avoid a breakup, and there are three things that I wanted to point out from the ruling. First of all, Chrome. A lot of folks thought that Google would have to divest Chrome. They don't have to do that, which is a huge win. They also don't have to divest the Android operating system. Again, a huge win. This would have been a completely different company without those. And the judge in the decision stated, quote, plaintiffs, the DOJ, overreached in seeking forced divestiture of these key assets, which Google did not use to effect any illegal restraints. That is also my opinion. The other big item, the second big item that you want to know about for this is compelled syndication, what they call compelled syndication, which is payments for search. And in his decision, Judge Mehta said the company can make payments to preload its search. And what they're talking about is, for example, go on your iPhone or whatever it is. You go on your iPhone and maybe Google is the default search engine. And Google pays billions and billions of dollars to be the default search engine, understandably so. Well, the Department of Justice had asked Google to stop and really wanted to stop this practice. And the judge wisely said, we're not going to stop Google from paying companies like Apple to be the default search engine. But we also are not going to allow exclusive deals where they're the only one. So basically, we're going to have to let other people pay also. So that is good. That is very good. But it's going to be substantial because that drives a lot of traffic for Google, but it won't be crippling. There's a lot of other people there that are going to be able to step up and pay. And another thing that I found very interesting here, I wrote down here, is AI, the impact that AI has had on this trial. When this trial started, what was it, 2023? This trial started in 2022 initially, and then 2023, when the ruling that there were a monopoly happened last year in 2024. When it started, there was really no AI. And in the judge's 226-page ruling, he dedicated 30 pages to AI, generative AI, and the market as it exists today. And he described the space as, quote, highly competitive, and wrote that there have been, quote, numerous market entrants with access to, quote, a lot of capital. And a lot of these companies now, they're working on creating browsers like ChatGPT and Anthropic and all these companies. They're working on creating new types of search browsers using their AI. So, the judge clearly, over 10% of the ruling really went to point out how serious the AI threat was for Google over time, even though, as we pointed out in our issue last month, that we think Google might have been caught flat-footed initially with the release of ChatGPT, but they certainly seem to have catched their footing since then. And again, the economics of this business are just outrageous. 30 cents for every dollar really goes to the bottom line. What an incredible company truly an incredible company, which is why it's going to get revalued higher, which is why it was up 6 to 8% after this opinion and this ruling came out. So bottom line is, I am bullish on Google. I don't think it's a super cheap thing. I don't think the stocks are going to go up double on this ruling at all. I just think what happens is we call this a repricing, which when there's an overhang or some kind of big information changes, some big obstacle is moved out of the way, what happens is Wall Street prices the stock higher, or when a new big obstacle is presented in front of a company, Wall Street prices the stock lower, a revaluation of an entity, and that is what is happening with Google right now. And I expect it to go higher for a bit. Anyway, that's all I have. Have a wonderful day.